across the group, as you've said. Jigar Mistry is with us, founder of Buoyant Capital. Jigar, good afternoon. Good to have you with us here. I trust you heard sort of Nimesh outline what's happening in the Birla Group. So I want to ask you straight off the bat, what do you like in that group? And we keep Idea and the Telecom bits, on one side for now. Reema will talk about that, and then we will ask you. But the other businesses, I mean, the cement businesses, the financial services, the apparels company, what's your sense?
Hi, Prashant. Good, as always, to be on the show with you. I think the telecom story obviously makes some bit of sense. Besides that, I think cement is one industry which hasn't really taken a lot of price hike recently. I think all price hikes are bunched to see that the election gets done. And then for a lot of these commodities, it's a seasonal uptake, even for telecom, I think. So within the lot, I think you've traditionally had exposure through Ultratech, Grasim. Paints, obviously, the dealer network looks like they'll be able to utilize that fairly well and get things rolling. So Aditya Birla Fashion, we have owned in the past, we no longer own it. But I think the cement and the commodities business makes a lot of sense at this juncture.
Okay, let's talk about Vodafone Idea now. That's up more than 10%. The stock has been an underperformer year-to-date versus peers. So year-to-date, Indus Stars got re-rated, rallied 80%. Bharti Airtel moved up to a near 30% rally. But there was still skepticism surrounding the success of Vodafone Idea's FPO. And that's the reason why the stock didn't participate. Year-to-date, Vodafone Idea is down 10%. Now that the FPO is successful and it's seen a strong overall subscription of 7 times, is there a case for Vodafone Idea's underperformance to reverse? Now, a successful FPO paves the way for the company to raise bank funding of 25,000 crore rupees, which all contribute to the growth capital to improve its competitiveness. It can invest in 4G, start rolling out 5G, and then maybe the subscriber market share loss gets arrested and the company can actually look at starting to add subscribers. Indus Stars, though, has been the big beneficiary. The maximum leverage in terms of Vodafone Idea's survival has been on Indus Stars. Because if as Vodafone Idea said that they're using this for growth, they will invest, and that investment means money and business for Indus Stars. So Indus Stars is up 80% year to date. CLSA upgrades it to a buy, target price now at 450, and they're saying that even now the stock Indus Stars is cheap relative to its global peers, and at the target price of 450 also, which is a good upside from current levels, about 100 rupees up from here, the stock would still be at a 45% discount to its global peers. So valuations, according to them, according to CLSA, are fairly attractive on Indus Stars. But Jigar, what's the best way to play the telecom story? Is it the start of a new dawn? Is it Vodafone Idea where the price is low? Is it Bharti Airtel, new lifetime highs? Or is it Indus Stars? Or maybe even the Tejas Networks?
Yes, Reema. So, I think you have very well highlighted all the current data points. I'll just take a step back and let you know that ever since Jio joined somewhere around 2016, 2017-18 onwards, the kind of disruption that has reigned in, I think has changed our perspectives altogether, right? Now, you talk to most telecom companies, their eventual aim is to reach like ARPUs of, say, about a little over $3 on a monthly basis. Now that, obviously it's not comparable to US, which is $30, $40, UK, which is $10, $15. We are looking at reaching the lower end of where the African market is, right? But because of the onslaught that has transpired over the past 4 or 5 years, we think that even this isn't going to be possible. Now, obviously, a large part of India's sort of data ecosystem revolves around us continuing to have lower rates. But once there are just 3 players or 2 players and 2.5 players, so to speak, you are eventually going to have a trajectory which is upward sloping, and then you can sort of chart out and branch out a lot of things. Vodafone Idea still sort of remains as to sort of the question as to continuing operations may sort of confound a few players. But as the entire ecosystem is concerned, Indus, sort of Bharti, etc., I think it remains a very, very interesting space. Given stocks are not cheap, they have run up reasonably well as well. But given the sort of ecosystem that we are in, we could sort of look to have some amount of pricing gains once the elections get done.
All right. Hi, Jigar. I'm not going to push you for a stock today, but I want to ask you about this approach to the markets. We are patting our backs and we're telling the retail audience out there the way they've shown the faith with SIPs coming in, from around 3,000 crores to around 18, 19,000 crores. So they've been very, very good. The problem is some part of this retail money has gone into a lot of micro cap names. And there's been a big, massive party out there. And that's some reason where, in fact, you could get a little circumspect. What's your view out there? You have some details. I think that, the micro cap, total market capitalization was around 5 lakh crores. It's gone up 6-7 times, I think, in the last few years. Give us that data point, and will you be a little bit cautious? Because retail money, they've had a ball or a blast, so to call it.
Right, Nigel. So I think that's what exactly it's transpiring, right? At the bottom of COVID, and we're talking of only micro caps. So company number 501 in terms of market cap and lower. 2018, it reached a high of roughly around 10 lakh crores in market cap. That fell to 5 lakh crores by sort of the low of COVID. And since then, with the rally that has transpired, we are crossing 31 lakh crore in just the micro cap market cap as a percent of total market cap. It's up to like 8 odd percent, which has been a historical high. Now, if you look at the sort of ownership pattern of these micro caps, 49% of the free float is owned directly by sort of retail, and another 20% via mutual funds. So look at the wealth effect that it has generated, right? For the past 3 or 4 years, it looks like you have generated some phenomenal lakhs of crores of wealth as a cohort. And you are redirecting that money into stocks itself, as well as mutual funds. You look at the sort of small cap folios now, from 4 odd million in 2021, that's gone up to almost 18 million plus. Now, small cap folios are higher than large cap or mid cap individually. And I think that is sort of pulling up the valuations across the board. And in certain cases, that's also happening where the free float is a much lower number. So I think things are great. Money could flow through. FIs tried to sell in 2022. That got bought off. Every other opportunity since, every 1,000-point correction has been bought off. But we are now entering sort of that congestion zone, right? Where you don't really know that, valuation is expensive, but every time I sell, it looks like I've made a mistake, so I sell. So something's got to give somewhere. Valuations are not cheap. As a fund, we have pivoted a lot more towards large cap. We were almost 70% small and mid cap March 2023. So a little over a year ago. That number has been brought down to under 45% now. If the rally continues, we intend to bring it down further to 30-35 odd levels. And I think, long term, it's great story. Railway, defense, it could be really big stories. But oftentimes we get into this zone where, share price just moves way ahead of fundamentals, and you're left holding the ball for 3-4 years. So I would be circumspect getting into a lot of this low float, small micro cap names. Mid cap, higher mid cap, large cap is, I think, par hold for the course.
Okay, speaking of mid cap stocks, check out Sun Pharma Advanced Research, SPARC. This is probably the 8th or 9th consecutive down circuit day for SPARC, Sun Pharma Advanced Research, down 5% once again. And this is the disappointment that's played out now for 9 consecutive trading sessions ever since SPARC declared to the exchanges that one of its key drugs that was supposed to be a big blockbuster drug to treat Parkinson's, that did not meet the endpoint results in the trials that were going on. And then they've suspended that. And now they'll see if this drug can in fact be used for the treatment of leukemia, but that's a much smaller market size. So that disappointment has really slammed the stock down. Today, even Sun Pharma is down quite a bit. Sun Pharma is the biggest Nifty loser, down about 3.5%. Jigar, any interest in Pharma? I'm not sure, if you can talk about these stocks, but, Sun, the fall is quite a bit today. And SPARC obviously is still reeling under that drug disappointment. Just your thoughts overall on either these companies or the overall approach that you're taking to Pharma.
Right, Surabhi. So I think pharma is an interesting space because sort of if you go back 1984, the Hatch-Waxman Act that allowed for Ranbaxy to file for Lipitor, that set the case which allowed Indian companies to file for these small generic opportunities. The whole rally that ensued till 16-17 was then broken because of a lot of things coming through, right? Obviously, the molecular opportunity changed from single to a lot more complex ones. The GDUFA fees was raised. lot new players came in, the inspections went up, and all that I think bottom around 21, 22. So I think from April 2023, that's when we put out that article as well. It looks like the entire generic market is fairly poised now to take the benefits of what's coming through. Uh, Whatever, like the incremental negatives are now behind us, and you could start looking at a lot more opportunities on a stable pricing base. Companies that do a little better in terms of complex generics, in terms of new approvals. So we have had some exposure there, notably sort of Glenmark, Davies, that are the names that we have traditionally sort of looked at. Pure play generics is something we've still not been able to do, but a combination of the India formulations market plus a little bit of generics business, I think has provided a reasonably decent opportunity the way we have sort of positioned ourselves there.
Jigar, since the last time we spoke, why don't you tell us what you've done in the portfolio? Anything new you've bought, anything you've added on where your conviction has become more bigger? Give us a flavor of what the action has been like at Buoyant.
Right, Prashant. So I think financials continues to remain a reasonably interesting business for us, right? Within that space, I think things have churned out a little bit. The HDFC, ICICI continues to be among our preferred ownerships. But I think at the lower end, you're still seeing a lot more interest with the kind of way valuations are shaping up with Axis and SBI. So I think those businesses is something where the weights have gone up for us. I think that is, I think, the most notable change besides the telecom business. I think a couple of months of telecom exposure that has played out fairly well for us. So I think, I think that's about it, Prashant.
What any other interesting names, additions to the portfolio?
Not really. I think more of the same. It's difficult, right? The businesses you own, you don't feel like selling because they always go up, and everything else that you want to buy isn't coming down enough. So it's a catch-22. I think we continue to own what we do and just recalibrated the weights, as I mentioned, getting far more away from small and mid caps, getting a lot more into the larger caps.
And financials is the largest weight, obviously. I mean,
yes.
Yeah, that's
yes.
Okay. So financials and telecom, which you of course spoke about earlier, are some of the areas which you like. Just a quick bit. Do you own anything in defense as a theme?
Not anymore, Prashant. So we have had a lot of exposure in the past, but it is the same situation, right? Because every time you try to look at these businesses with one particular buyer, which is obviously is the government of India for most occasions, but then with sort of one buyer, MOD or government of India, they giving out a lot of orders. We trying to build in what that means in terms of profitability. Eventually, the people who have tried to execute these businesses in the private sector have not really fared reasonably well. And valuations have had a one-way run, especially post, I think, December when BJP won those 3 state elections and it looked like they'll form the third term at the central government level. So I think from that standpoint onwards, the rally that has ensued post that, it's difficult to even hold on to the businesses if you're looking at it from a bottom-up sort of perspective. And the reminiscence of the capital goods rally keeps coming back to you, right? 2003 to 2008, the rally we had, the whole index went up 19 times and everybody started building in all the sort of orders that will eventually play out. And once the market peaked in 2008, the entire sector did not come back to that same level till 2021. So 13 years of virtually zero performance at the whole index level. Obviously, a lot of companies within that index went down to zero. So one needs to be extremely sort of cautious as to how these stories play out. Obviously, India as an economy can do a lot better domestic build-outs, etc. But we would like the businesses to get acclimatized once it gets to a certain level and then deliver some before they move up. The problem with today's market is that if it's on its way up, it hardly enough finds any time to acclimatize. It just keeps moving up. So difficult for sort of investors like us to then just build in the blue sky and hope for the best.
Someone said, right, what is worth doing is worth overdoing. I think that is the case with many areas. But well put, Jigar. Thank you very much for joining us, and it's a pleasure having you with us here on CNBC TV18.
Likewise, Prashant.
So
Thank
good
you.
conversation. See you back again soon. We'll take a break. The market's up 35 points, which means we've given up some of those gains that we were talking about earlier, and it's more quiet. So 22,367 is where the Nifty is at least. We take a break. We're back with more.